Hey everyone, and welcome back to Value Vest Daily. We're continuing our big series 100 Essential Investing Lessons, and today is a good one. We're going to get inside the heads of some absolute legends to figure out how they hunt for those monster growth stocks and how they build a portfolio that can basically survive anything. We're talking timeless wisdom from the best to ever do it. All right, let's get right into it.
So who are we learning from today? Well, we've got three of the greats lined up. We're talking about Peter Lynch, the guy who was an absolute master at hunting for growth. Then there's Philip Fisher, who was like the original Sherlock Holmes of investing. And finally, Ray Dalio, the genius who literally architected the all-weather portfolio. We're going to take their biggest ideas, covering lessons 41 through 50 in our series, and turn them into real practical strategies you can actually use.
Okay, here's how we're going to break it all down. First, we'll jump into Peter Lynch's world and see how he found those massive home run stocks. Next up, Philip Fisher will show us how to actually check if those growth stories are for real. Then we'll switch gears to Ray Dalio to learn how to protect everything we've built. And at the end, we're going to tie it all together into one powerful investing plan. Sound good?
All right, let's kick things off with the one and only Peter Lynch. Look, this guy's entire philosophy was laser-focused on one single thing: finding companies that could deliver truly explosive, life-changing growth. He wasn't playing for a few percentage points here and there. No. He was out there hunting for giants.
In this quote, it just gets to the absolute core of how Lynch thought. He basically said that once you've put in the hard work and found a genuinely great company, the biggest danger isn't the market taking a nosedive. The real risk is you getting scared and selling way too early. You know, cashing out and then watching it climb for years or even decades without you. That's the real pain.
So what was he looking for? What was the ultimate prize? It was something he famously coined the 10-bagger. And yeah, that's exactly what it sounds like: an investment that explodes to 10 times what you originally paid for it. Now that might sound like winning the lottery, right? But Lynch showed everyone that it wasn't just possible. It was a repeatable process if you focused on innovative companies that you could actually understand in industries that were clearly growing.
When you really break it down, his strategy comes down to two simple but powerful rules. First, you have to be an active hunter. These 10-baggers aren't just going to show up on your doorstep. You got to go find them. And second, you have to stop driving by looking in the rearview mirror. What a company did in the past is, well, it's history. Lynch was obsessed with what a company was going to do, because future earnings, that's what actually puts money in your pocket. Want to see this in action today? Okay, just look at a company like Symbotic. They're in the AI-powered warehouse robotics space, and the stock has already shot up over 200% this year. And the thinking behind that surge is pure Peter Lynch. Investors aren't getting bogged down by this quarter's revenue numbers. Nope, they're looking ahead and betting that this company could totally dominate the huge warehouse automation market for the next 10 years. It's a classic Lynch growth story unfolding right now.
And that second lesson from Lynch about focusing on what's next, Atlassian is the perfect poster child for this. Now, if you just looked at their current profits, you might think, whoa, that stock looks pretty pricey. But the smart money wasn't looking at today. They were looking at the projected 25% growth in earnings, all thanks to their big push into cloud products. And guess what? That forward-thinking vision paid off big time with a 40% gain. It's a textbook case of rewarding investors who see the long-term story, not just a single snapshot in time.
Okay, so let's say you found what looks like a great growth story, just like Lynch would want. But how do you know it's legit? How do you know it's not all smoke and mirrors? Well, that's where our second master, Philip Fisher, steps in. He was the guy who said, hold on, let's do some real detective work here to figure out if the company is actually as good as it sounds.
And this quote from him just nails it. He's saying that the market is full of people who can tell you the stock price down to the penny, but they have no clue what the business is actually worth. For Fisher, the number on the screen was just the beginning. The real value, he said, is in the stuff you can't easily measure. The quality, the competitive edge, the secret sauce. The kind of stuff that just doesn't show up on a spreadsheet.
So how did he find this real value? He used a method with a fantastic name: scuttlebutt. Seriously, that's what he called it. And it's basically just good old-fashioned on-the-ground snooping. It means getting away from the boring annual reports and actually talking to people who know the company inside and out. Talk to their customers, talk to their suppliers, heck, even talk to their competitors. That's how you get the real story, the gossip, the scuttlebutt behind the official numbers.
So Fisher's big lessons for us are pretty clear. First, you have to do your scuttlebutt. Get out there and find out. Do customers absolutely love this product? Do suppliers actually like doing business with them? And second, bet on the innovators. Fisher was obsessed with companies that were always pushing the envelope with research and development because he knew that in a world that's always changing, innovation isn't just a nice-to-have. It's a company's best shield and its sharpest sword.
A company like Serve Robotics is a fantastic modern example of this. You know the official reports on their delivery drones? They were fine. They were positive. But the investors who really did their Fisher-style homework, the ones who talked to the suppliers and the early customers, they heard something different. They heard whispers about just how incredibly reliable the technology was, and that little piece of scuttlebutt gave them a massive edge. They got in and were rewarded with a huge 150% jump before the rest of Wall Street even knew it was happening.
All right, so we've hunted for explosive growth with Peter Lynch. We've verified that story with Philip Fisher. So what's next? Well, now we have to protect our money. And for that, we turn to our final master, Ray Dalio. He's the guy who literally engineered a portfolio meant to not just survive any storm, but to actually thrive in it.
And this quote is really the key to understanding Dalio's entire worldview. He's warning us against the single biggest mistake investors make, assuming that what's been working is just going to keep working forever. It won't. The economy has seasons, right? Things change. And Dalio's point is that the only way to win in the long run is to have a portfolio that's ready for anything, whether that's booming growth, a painful recession, soaring inflation, whatever comes next.
This brings us to his legendary all-weather portfolio. And the key here is that it's all about balance, not trying to predict the future. He designed it to work no matter what economic season we're in. So you've got stocks for when the economy is sunny and growing. You've got long-term bonds that tend to do well when things get cold and we hit a recession. And then you have things like gold and other commodities that act like an umbrella for when it starts raining inflation. See how it works? Each piece is there to balance out the others.
So you might be asking, what's the catch? And that's a fair question. In a really strong year for the market, the all-weather portfolio might not keep up with something like the S&P 500. You can see it here, a solid return, but a bit less than the broader market. But that's not the whole story. The real magic is in the volatility. This portfolio is built for a much, much smoother ride. It's designed to protect your hard-earned money when those inevitable storms do hit the market.
But it's not just about that specific mix of assets. Dalio also gives us 3 other massive lessons. First is something called risk parity, which is a fancy way of saying make sure no single part of your portfolio can completely wreck you if it goes wrong. Second, you got to be ready to adapt. You can't just set it and forget it forever. And third, and this one is so important, you have to learn to ignore the crazy day-to-day headlines and focus on the big, slow-moving trends instead.
So, we've walked through the wisdom of 3 absolute titans of investing. We've seen how they think. Now, for the best part. Let's pull all of this together into a single, powerful master plan that you can actually use to shape your own investing strategy.
And here it is. It all comes down to this simple 3-step framework. Step 1. Hunt for growth like Peter Lynch. Get out there and look for those potential 10-baggers, those true game changers. Step 2. Verify the story like Philip Fisher. Do your homework, your scuttlebutt, to make sure it's the real deal. And finally, step 3, protect your portfolio like Ray Dalio. Build a smart, resilient structure that can handle whatever the market throws at it. It's that simple. Hunt, verify, and protect.
Okay, before we wrap up, I have to give you our standard disclaimer. Remember, everything we've talked about today is just for informational and educational purposes. It is absolutely not financial advice. Please, always do your own deep research, and it's always a good idea to chat with a qualified financial professional.
And hey, if you got some value out of this breakdown today, it would mean the world to us if you could hit that subscribe button, give this a like, and maybe even share it. We're here every day trying to break down these big ideas to help you put your money to work smarter.
And one last thing, we really want to hear from you. Drop a comment below and let us know. Are there any of those high-risk, high-reward ideas you've been looking at that you want us to do a deep dive on? Let's get a conversation going. Thanks so much for hanging out with us today.